The local share market tumbles as a decision by the Federal Reserve to lift interest rates roils global markets. One of the country's largest retailers takes on its landlords, and why smoking might be banned in apartments. It's Friday, the 28th of January, 2022. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Looking forward to the smoking story.
I certainly am. I've got a very strong opinion on it.
I know.
We'll save that one for later. Of course, stay listening as well for Sean's chat to Gareth Aird, Head of Australian Economics at the Commonwealth Bank. Really good chat, that one. But first, our main story today, Sean, as I mentioned, the local share market tumbled further yesterday after the US Fed said it was ready to lift interest rates.
Yep, sure did. It's been a crazy few sessions on the market. The S&P ASX 200 officially entered correction territory yesterday, down more than 10% from its August highs. Tech stocks were hit hardest, a bit like Wall Street. Both WiseTech Global and Zipco dropped around 9% yesterday. Xero was off 7%. There was some serious selling. Aristocrat Leisure and Transurban closed down 5%. Goodman Group, Wesfarmers, they both dropped 4%. Macquarie and CSL fell more than 3%, while the Commonwealth Bank was off 2%. Now, the big miners were the exception, with BHP, Rio Tinto and Fortescue Metals all ending higher. That's about commodity prices, that one. The market ended down 1.8% to 6,838 points, though at one point was off more than 2%. The sell-off came after Federal Reserve Chair Jerome Powell said the world's most powerful central bank will have to hike interest rates faster and higher than anticipated to keep a lid on inflation. Chairman Powell thinks inflation is probably much worse than the Fed had forecast. Ouch. One of the reasons the share market has done so well during the pandemic is all the so-called easy money. Interest rates have been low, governments have been propping up economies with schemes like JobKeeper, banks and landlords have been helping out small businesses. But now it looks like that's going to be wound back, and that might not be so good for earnings, hence the sell-off.
Okay, so that's the share market. What about elsewhere in the economy? What about the Aussie dollar?
Well, it fell back immediately after the announcement, and it's now buying under 71 US cents. Short-term moves in the currency markets reflect interest rate expectations. And with rates in the US expected to be higher than local rates, the US dollar appreciated against the local dollar. Now, bonds tumbled as well. Remember, people buy bonds because they're safe. Government bonds are effectively an IOU from Canberra, but owning a bond that pays a fixed rate in a rising interest rate environment isn't particularly attractive, and they're being sold off. That's what's happening around developed and developing nations at the moment. Aussie 10-year bond yields, which rise when bonds are sold off, are at their highest level since October last year.
Sean, can I just say, whenever you start talking about bonds, you always tend to slow down a little bit. I really appreciate that because bonds are one of those topics that I really need to think about to understand.
They're actually really hard to understand because when you talk about sell-offs, that means prices falling, yields are actually rising, and it's kind of counterintuitive. At least you said that and you didn't tell me that your eyes were glazing over. Anyway.
They have not yet. Carry on.
Good. Oil prices, we better talk about them. They've rallied with a global benchmark hitting $90 a barrel for the first time in 7 years. In oil's case, it's been more than just the Fed. Prices are moving on fears over Russia invading the Ukraine. That's been good for the local oil and gas groups, of course, with Santos jumping more than 3% yesterday, and Woodside was up 2.3%. Remember, that's in a really tough market.
And what about Wall Street? How did equities respond to the Fed's decision?
Well, Michael, the Fed announcement came after the market closed on Wednesday night. Overnight, markets rallied initially, jumping 2% before falling back to be flat for the day, at least in early afternoon trading. A few things going on there. Investors were buying into the market at its lows, and that pushed it higher. Tech stocks, led by Tesla, were easily among the worst performers last night. But the other piece of information, which is really relevant, official figures released showed that the US economy grew at an annualised pace of 6.9% last quarter, much, much faster than anticipated. That, of course, helped the market. In Europe, markets were generally higher, though there's still plenty of volatility.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around today. Premier Investments, the owner of a bunch of brands including Just Jeans, Peter Alexander and Smiggle, are taking on the landlords.
Yes, after announcing that sales for the last 6 months were up slightly, Premier said it would exit 4 prime sites in a Sydney CBD shopping centre. Now remember this, Premier in recent years has taken a very hard line with landlords, refusing to pay rent during the worst of the lockdowns, arcing up over QR codes in stores, and pushing to change the way rents are calculated so they reflect sales rather than foot traffic. Now, it says in the mid-city centre in Sydney, foot traffic has tumbled due to Omicron, and it will be pulling its Peter Alexander, Smiggle, Portmans and Just Jeans stores. Premier is a leader in the sector, and its move will force all landlords to take a look at how they're charging rents. There'll be plenty more in this space, I guarantee you that. Now, Michael, the actual revenue numbers from Premier yesterday were pretty good. Given all the lockdowns late last year, online sales now make up about a quarter of the group's total turnover.
I'm not surprised by that. There has been a steady stream of parcels arriving from Peter Alexander over recent months. They always have very, very good sales, so I'm not surprised to see that the online sales are up there. As share price, though, of another high-profile retailer, Kogan.com, fell more than 12% yesterday, Sean.
That's right. We've spoken so much about Kogan over the last couple of years. The retailer's share price has gone from almost $8 before the pandemic to about $25 15 months ago, and now it's a little over $6, well below its pre-pandemic levels. Kogan said supply chain disruptions and higher costs had hurt forecast profits, which it now thinks will be more than 50% lower than a year earlier, even though its customer base has topped 4 million. That's the rise and fall of an online retailer, that story.
Yeah, it certainly is. Now, this is a serious one, Sean. Woodside has decided to pull out of Myanmar, suspending drilling operations in the Southeast Asian nation.
It will cost the company around $300 million to do so, and follows similar decisions by Total Energies, that's a French giant, and Chevron. It follows last year's military coup and deteriorating human rights in the country, which actually has pretty decent gas reserves. Woodside's decision highlights sovereign risk for any company, and particularly miners who operate in unstable government environments. The company is one of the biggest offshore drillers in Myanmar, or at least it was, and that economy will suffer as a result. Remember, an Australian advisor to the ousted Aung San Suu Kyi, who ran the country until 12 months ago, is still being detained by the military in Myanmar. Sean Turnell, an academic from Macquarie University, had been working in the country before being grabbed by authorities. That was 12 months ago, and Mr. Turnell is still languishing in jail.
Now, back home now, there's been a shift in behaviour during January due to Omicron, with people avoiding public transport and the office. I'm not surprised by this, Sean. I don't remember the last time I caught public transport. I think I'm still a bit scared to do so.
Yeah, and if you think about your own households during January, I think everyone changed their behaviour, or at least the vast majority of people changed their behaviour earlier in the month. Now, Google mobility data analysed by the Financial Review shows just that. People spent much more time at home than usual in early January. It was effectively a self-imposed lockdown and was most prevalent in the ACT, Northern Territory and New South Wales. Also, people worked from home. They didn't go back to the office. None of that, of course, is too big a surprise. Where there was an increase was in trips to supermarkets and pharmacies. That doesn't surprise me either, because I think when we would try and buy rapid antigen tests, we'd regularly visit 3 or 4 or 5 pharmacies to try and get them. The data's worth watching because it provides real-time analysis of what's going on, rather than waiting for official figures. In our interview with Gareth Aird from the Commonwealth Bank straight after this show, he says debit card data shows things slowed in the first couple of weeks of January, as per this information, but he also adds that things have picked up since then. With all the debate around inflation and interest rates, these small data points have become much, much more important.
Yeah, Gareth's chat today is an absolute ripper. He's done a few with us so far. This is his best, absolutely. Now, Sean, the Omicron numbers continue to improve.
They do. New South Wales reported more than 17,000 cases yesterday. Victoria's at almost 14,000. Queensland was about 12,000 or a little below that. South Australia's at 2,000. ACT's almost 900 and Tasmania's a little over 700. Lots of numbers there, but what's really encouraging is that generally the 7-day average in most states is falling, and that's what we want to see. There's also not a big jump in hospitalisations, nor is there a big jump in intensive care admissions.
Yeah, that's some good news. And an interesting ruling out of Queensland. I mentioned this one earlier, Sean. A regulator has banned a Service Paradise woman from smoking on the balcony of her apartment, saying it was a hazard rather than a nuisance. I think this is a terrific decision.
Clearly an anti-smoker. It was certainly a big win for anti-smokers. Strata bodies have previously tried to ban smoking on apartment balconies, arguing they want to protect other residents. Get that? But pretty much they've failed. But by calling smoking a hazard, not a nuisance, the Office of the Commissions for Body, Corporate and Community Management in Queensland has opened the way for strata bodies to potentially outlaw smoking on balconies. The Real Estate Institute of Queensland argues that people should be able to smoke freely within their homes. Tricky one, this one, Michael. I'm anti-smoking, full stop. But is this an invasion of civil liberties about what you can do in your own home? I can't work that one out.
No. If you've ever sat in an apartment and you've had smoke drifting into your apartment from the place next door, you will be one of those people like me applauding this decision today.
Very true.
Okay, Sean, what's making headlines in today's news media?
The Financial Review is reporting that the number of new apprentices across the country last financial year jumped by 60%. But according to the National Centre for Vocational Educational Research, it will still be a few years before we no longer have a shortage of skilled tradespeople. The Australian is reporting that monthly financial statements out of Canberra show the budget bottom line has been boosted by $8.5 billion on the back of the jobs recovery and surging tax revenue. Social security payments fell by almost $2 billion last month alone. And Associated Press says most coronavirus restrictions, including mandatory face masks, were lifted in England overnight. The British government says its vaccine booster rollout has successfully reduced serious illness and COVID-19 hospitalisations.
Okay, running through some of the other stories around today, Australia will help European friends and allies, in the words of Resources Minister Keith Pitt, as necessary if Russia cuts off gas supplies to the continent. That's amid tensions, of course, over the Ukraine. There's been no formal request sent, but the US is preparing a global contingency plan with major gas producers in the event of an invasion by Russia.
Fortescue Metals is actively promoting its green credentials and ambitions to become a carbon-neutral company. We've spoken plenty about that one. But one of the world's biggest credit rating agencies, Standard & Poor's, has given it a below-average environmental, social and governance score. In essence, the miners' decarbonisation plans and good safety record aren't enough to offset the emissions intensity of its iron ore business.
And Sean, I don't know whether we've ever talked about shearing and wool on Fear and Greed before, but we're going to do it today because farmers are reporting delays of up to 8 weeks in shearing schedules, reflecting a combination of Omicron and, of course, border closures as well. Sheep are at risk of things like fly strike or other illnesses from having long wool over the current relatively wet summer, according to the Financial Review. The industry is also suffering from not enough transport workers or abattoir staff. Yet another example of the labour crisis in Australia at the moment. It is affecting everyone.
Sure is. Genworth Mortgage Insurance has been picked as the exclusive provider of mortgage insurance for the Commonwealth Bank. So when you take out a home loan and you don't have a large enough deposit, many of us have done that, and it's particularly prevalent when house prices are as high as they are, you may need to take out mortgage insurance. Given Commonwealth Bank is the biggest mortgage lender in the country, a deal like this is worth quite a bit to Genworth. As a result, its share price jumped more than 11% yesterday.
And finally, P&O Cruises has cancelled 15 cruises due to depart from Sydney or Melbourne, meaning cruising from Australia's east coast is now unlikely before July. Bad news for the industry, but not entirely unexpected, I suspect. Now, Sean, what's the key overseas news this morning?
The United States and its allies have indicated what they're willing to negotiate about in relation to Russia's advances towards Ukraine. The US formally rejected Russia's demands that NATO retreat from Eastern Europe and bar Ukraine from ever entering the alliance. But the US said it will negotiate on nuclear arms controls and military exercises. A small step, but a step nonetheless. Also, Michael, there were some pretty interesting figures out of China yesterday. Remember, it's Australia's biggest trading partner, notwithstanding all the bans and tariffs imposed last year and the year before. We still sell plenty of stuff to the world's second largest economy, particularly iron ore. Data shows China slowed this month. The housing market has pulled back, so too private consumption, business confidence is down, and of course the share market has fallen. not great signs for China or for Australia. Finally, keeping with the music theme that seems to pervade Fear and Greed pretty regularly at the moment, there's a spat between Spotify and Neil Young, the veteran rocker. Mr. Young is upset that Spotify is running a podcast by Joe Rogan that critics say pushes falsehoods about vaccinations. Mr. Rogan is Spotify's #1 ranked podcaster and regularly interviews controversial figures. Spotify says it works to balance safety for listeners and freedom for creators. It won't be taking down the interview. Mr. Young, creator of songs including Heart of Gold, Harvest Moon, and Old Man, has asked to be removed from Spotify. And apparently, Michael, that's happening.
You would be a Neil Young fan, wouldn't you, Sean?
I've got to say, Neil Young was before my time.
Oh, I'm sorry.
Only I'll take that as an insult. And only in recent years have I really discovered him. I did see him actually in the late 80s at the Sydney Entertainment Centre. I think he's spectacularly good, but I've only come to the party in recent years.
Not a huge fan. All right, up next is the Fear and Greed Daily interview with Gareth Aird, Head of Australian Economics at the Commonwealth Bank. We've mentioned this one a couple of times now, Sean.
It was just a great chat about inflation, interest rates, what's going to happen in Australia, what it means for the real economy. Gareth knows his stuff and he has a great ability to turn it into English. Well worth a listen.
Yeah, absolutely right. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Have a great day, Michael.
Thank you too. It's Friday the 28th of January 2022. Make sure you're following the podcast and, of course, join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.